In November of 1928, Herbert Hoover was elected as President of the United States. This election happened during one of the strongest US stock market rallies in history, following a complete decade of very strong stock market performance, leading to one of the most expensive stock markets in history. This euphoria continued for a few months after the election, but was ultimately followed by Black Tuesday, and then the Great Depression led to the stock market declining for almost a full decade. Fast forward to November of 1972, President Nixon was elected right before the S&P 500 made a peak that wouldn't be revisited for 8 years. Fast forward to November of 2000, President Bush was elected, this time marking almost the exact peak of the dot-com bubble, once again ending a 10-year-long streak of rising stocks and followed by a 10-year downward streak. These 3 years, 1928, 1972, 2000, all marked absolutely massive turning points for financial markets, ending extended periods of prosperity and marking the beginning of painful declines. And all 3 of these turning points were accompanied by major US elections. Of course, there are many examples of elections that did not lead to these kinds of market crashes or extreme recessions, but heading into the 2024 elections, the stock market has been experiencing one of the strongest rallies in history, and economic growth was at the forefront of the debate, because despite an extremely strong stock market, most people in the United States aren't very happy about the state of the economy. US consumer sentiment is at one of the most depressed levels since the Great Financial Crisis. This is a survey that's done by the University of Michigan that has been measuring how people feel about the future of the economy going back to the 1950s. And all of the moments where consumer sentiment has been at similar levels to today have been associated with economic recessions in the United States, as indicated by these gray bars. Consumer sentiment has been around these levels since 2020, so basically the entire duration of the current administration. Perhaps one of the key reasons for why Trump was able to win the presidency, as many of his policies were centered around the promise of stronger economic growth. In fact, as we discussed in the last video, the US stock market has reacted very favorably to the news of Trump's victory. The promise of further tax cuts on US corporations and deregulation are both boosting investor optimism. But we had very similar kind of optimism heading into the 1928, 1972, and 2000 elections. In fact, we have quite a few key similarities between these episodes and today. For example, interest rates in the United States in those 3 episodes were in a very similar posture to today. In all 4 of these cases, the Federal Reserve, the US central bank, raised their interest rate to about 5%. And in all 4 cases, we see that the interest rate dictated by the Federal Reserve was higher than longer-term interest rates. Now, that may sound a little bit complicated, but you've probably heard of something called inverted yield curve. And that's exactly what happens when this line is above this one. As you can see from this chart, it doesn't happen very often, but when it does, it has huge implications for the economy looking forward, and it tends to be followed by an economic recession. So in all 3 of these episodes, the seeds for a recession were sown long before the actual election results. So the elected president really couldn't do much to save the economy. Now, Donald Trump himself has repeatedly said that the US economy could go into another Great Depression if he wasn't elected.
Toward a Great Depression. You're going to have a depression.
His main argument is that his economic policies are generally more favorable to the economy. Things like tax cuts and deregulation are indeed things that can stimulate economic growth. So can Trump's favorable policies really avoid a large economic downturn? Well, let's rewind to the US elections that occurred right before the Great Depression in November of 1928. Right here, Herbert Hoover supported the Revenue Act of 1928, which effectively reduced taxes. Herbert Hoover was also a pro-business Republican and pro-private sector growth. This is probably an oversimplification of things, but when it comes to the political spectrum, we can say that Herbert Hoover was a lot closer to Trump than he was to Kamala Harris. Now, the stock market soared into this election, excited by these tax cuts and deregulations, and they soared for almost another year following that. But it did not stop the most severe downturn in history from occurring. The exact same thing can be said about George W. Bush in November of 2000 and about Nixon in 1972. Both favored lowering taxes and a free market economy. Both were not able to stop a recession from occurring shortly after. So in conclusion, in the grand scheme of things, presidents can't can't do much to change the course of the business cycle and financial markets. Their policies can definitely prolong or shorten economic booms or recessions with favorable or unfavorable policies, but they can't outright prevent a recession from happening. So is Trump's 2024 presidential win a sell the news event, just like all of these major US elections were? Well, as we just saw in 1928, the stock market was optimistic heading into the election, but stocks continued to rise for another year following the election. In 1972, the stock market continued to rise for another 3 months before it peaked. Today's stocks are experiencing the ideal market environment to thrive. Economic growth has been stable, inflation has been low, and the US central bank has been lowering interest rates. We've only had this specific type of environment a handful of times throughout history. All of them are highlighted right here. It seems likely that this environment can last another few months. When we zoom in on the technical chart of the S&P 500 today, we're seeing the index attempting to break out above a key trendline resistance. If this breakout holds, it opens the door up for a move to 6,500 points by the end of the year. Now, we use this recent correction to load up on quite a few different trades on stocks and cryptocurrencies that were trading at a discount just a couple of weeks ago before the election. You can access all of our trades, buy and sell alerts, the entire strategy that we have on the stock market, cryptocurrencies, commodity markets by signing up to our website at bravosresearch.com.